Hey guys, Tony here. In this video, I want to talk with you about how AMC did for Q3 versus the forecast that I gave you 30 days ago. But before we do that, we're going to have a live stream tonight at 8:30 p.m. Central talking about the new prospectus, the new dilution that AMC announced today. Be sure and join us on that live stream tonight. It'll be the Massalorian and myself, and maybe a special guest or two will drop in. Now, let's talk about this earnings. We'll go through my spreadsheet, the forecast that I gave versus the actuals, and we will look at an update on the dashboard. Overall, this was a fantastic quarter for AMC, and I know your first thought when I say that is, okay, then why did the price go down? We'll talk about that at the end of the video. Total revenue for AMC in Q3 grew by 45%, coming in at $1.4 billion. Net earnings for the quarter came in at a positive $12.3 million. That's up $239 million from that big loss they had a year ago. That's 2 quarters in a row that are positive, and yes, I agree, the positive amount is small, and there is a long way to go before AMC is in good shape. Diluted earnings per share came in at positive 8 cents compared to negative $2.20 a year ago. Adjusted EBITDA improved by $206 million, coming in at $193.7 million. Net cash provided by operating activities was positive in Q3, $65.9 million, an improvement of $289 million versus that big negative we had a year ago. AMC also raised money with an at-the-money offering in September of 2023. And the total cash improved from last quarter at $495 million to the new cash and cash equivalents of $729 million. If you are a regular viewer of this channel, you know that I've been saying for a long time, in my opinion, this company probably needs to raise somewhere around $1 billion. That might be high, but I didn't think that they were going to be done at $325 million that they raised in September. That $1 billion that I think they need to raise is not to pay off $5 billion in debt, obviously. It's to fix the balance sheet, which is an absolute wreck right now. We'll talk about that again, as we have been for the last year when we look at the dashboard. But they will use some of it to also pay off the debt. We can see here that $24 million was paid off this quarter for $17.4 million. That's a 28% discount on that small amount of debt that they paid off in Q3. And they will continue to raise cash, I think, like we saw with that offering today, to continue to improve the balance sheet as they have communicated to us many times. That is one of their strategic objectives. And they will tackle some more of the debt that is coming up soon, and then refinance and push out the rest of it to a later date like many companies do. Other great things that we see here: attendance up to 73.5 million patrons compared to 53.1 million a year ago. Both the US and international markets seeing fantastic increases in attendance. And at the very bottom, you can see there that AMC continues to prune out screens or theaters which are not operating, and the total screens has decreased from 10,138 to 9,781, and I think they need to continue to get rid of non-performing locations as leases come due and continue to work down the cost that they are dealing with. To sum up the good news in a nutshell, though, it's right here in this sentence. This was AMC's most successful third quarter in their entire 103-year history. And that is despite attendance being down 16% where it was pre-pandemic in 2019. Progress is being made. Challenges still remain. Now, let's talk about the estimate I gave you a month ago. If you recall, I had what I thought was going to happen, and I had 2 other alternate scenarios in case mine was too pessimistic and AMC captured more of the domestic box office than I thought, which they did. Surprise. Let's talk about these 3 estimates right here. This was the one that I went with so that I was not overly bullish to you guys. And one major mistake that I see right away that I made was in the share count. I already fixed it in here, but a month ago I had 198 million shares, and in the 10Q, AMC calculated their earnings off of 162 million shares. So I already went ahead and fixed that right now. Total domestic box office for Q3 came in at 2648. This is the actual numbers from AMC's income statement. This was my estimate that I thought was going to be the reality. And the numbers actually came in between my other two scenarios. So what were the different scenarios? It all has to do with what percentage of the domestic box office AMC captured. In Q2, you can see here, they captured 27.79%. So that is what I went with for my estimate on Q3. It's kind of been all over the map as we go back and look at previous quarters, from 27.9% all the way as high as 34%. In Q1, it was 31%. So in my two alternate scenarios, I said, what do we need to have to break even? We need to get 29.4% or so to break even. And if we did as good as Q1, 31%, that would be my best case scenario for Q3. We came in actual at 30%, 30.1% of the domestic box office came in as admissions revenue for AMC. That was this $797 million admissions revenue. That translated down here at the bottom line to 8 cents positive earnings. Let's just see what happens on my spreadsheet. Let's see how accurate it is. If I change the percentage to 30.12 instead of 31%, I would have only been a penny off if I had gone with my most bullish scenario. I did show y'all all three of these a month ago, and I said I was going to pick the one that was the most conservative. And at the end of the day, I'm happy that I was wrong. And of the three scenarios, I'd much rather see the most bullish one win. The most important formulas and calculations I have buried in this spreadsheet are derived from the domestic box office and what percentage of it that AMC gets. And that's always an unknown. So this is a bit of an art. It's not always going to be perfect. And I plan to continue to try and give you three scenarios for each quarter, a worst case, a middle case, and a best case. And then we will have to see what percentage of the box office AMC ends up getting. Since my best case came within a penny of the actual, I think that the spreadsheet's working pretty good. We can see here I had food and beverage estimated at 61%, and it came in at 60.5% of domestic box office. Other theater, I have calculated in 15.5%. It came in at 15.73%. When we get down to cost, I calculate the film exhibition cost at 51.5%, and the actual was 49.96% cost. Food and beverage cost I have is 18.7. That came in at 18.67. Almost nailed that one. And then the variable operating expenses, I have a multi-layered formula there, depending on how many people are coming into the theater. And I did make an adjustment to that for next quarter. If we are over 1.4 billion in total revenue, I upped my variable expense by 1%. So every time we do this, every quarter I get more data. I can make this spreadsheet a little more accurate. All right, let's move over and talk about my dashboard so we can see what's changed. Just a refresher, if you're new here, this is my pictorial representation to you of how I assess the risk. I want you to see what I'm looking at when I'm talking about risk and what is a safe investment versus a speculative one. If we have lots of green on there, then it's a relatively safe investment. Doesn't mean that you jump in and buy at that price, because you still got to do a value analysis, but your risk of downside volatility is lower if everything is green. And it's pretty much exactly the same rules for every company. Depending on what the results are, it automatically turns a box red, yellow, or green. Let's look at AMC. Annually, are they profitable? No, not yet. So that box is still red. Earnings per share momentum, it was positive for the second quarter in a row. So it almost got a green, but I'm worried about Q4 being potentially negative or lower than Q3. So that one is going to stay yellow for now. Maybe next quarter we can turn it green. Return on equity is red in this dashboard because AMC has negative shareholder equity on the balance sheet, a bad thing to have. Cash position with the recent cash raise and AMC's ability to continue to raise cash turned this box green. Debt to equity ratio is also a red box for me. Same reason as the return on equity, a negative shareholder's equity on the balance sheet. The current ratio or working capital, which is on the balance sheet, the current assets versus current liabilities, improved on this dashboard from the one a quarter ago, but it's not yet at the level where I could turn it green. It's going to need to be 1.0 or higher to get a green on this dashboard. Remember that working capital is sort of like a snapshot of a company's ability to pay its bills over the next 12 months. And I want to see, and Wall Street wants to see, and AMC wants to see the working capital situation fixed, which is why they're going to continue to raise cash. This is a big red flag to anybody on Wall Street, and as an investor, it's something that you should be paying attention to, not minimizing to yourself or your friends and saying that the finances are okay. Having a working capital problem is a big deal. Bottom left-hand box on the spreadsheet, revenue growth rate. Green this quarter for AMC, 45% year over year growth rate on the revenue. And if we just look at a chart, you can see where we had that stall out in revenue in 2020 and a nice consistent recovery since then. Dilution risk, I still have red box as high. I still think there's going to be more dilution. We got notice of some additional dilution just today, and I don't think that they are done just yet. I'm not excited about more dilution, but I think that they are laser focused on fixing the balance sheet. CEO and management, I gave that one a yellow. I know many of you would give it a red. Some of you would give it a green. My general thoughts on how to code this box is, are they telling you what they're going to do? And are they doing that? And by that measure, it probably would be a green. They're telling us exactly what they're going to do, and they are doing it. But if I colored this green, I would never hear the end of it. So we're just going to go right down the middle and call it yellow for now. Short interest is low, under 10%. So that is a green box. That means that the shorts at this current price level are not maintaining an ongoing short interest on AMC, only 6.8%. Is it being shorted by day traders and attacked during the day, and then they close out at the end of the day or 5 minutes later and walk the price down? Absolutely. But the carrying short interest percentage is only about 6.8%. And when that is low, that is a green box. Dividends is yellow because AMC is not paying dividends. That's not a penalty box. They're just not paying a dividend. If they do, that box will turn green. Insider trades gets a green because over the last 12 months, there has not been huge unplanned sales by the executives. That's all I got for you on this one. Drop me any comments or questions you have down below, and I hope to see you on this evening's live stream.